When it comes to trading the future markets, how long does it take, or how long will it take you to actually grow a small account? Can you do it in a matter of only 30 days? Okay, someone that may have $500 or $1,000, or maybe you have more than that. It's all going to depend on the trader themselves, but it's really going to depend on how well you are at reading structure and price action. Okay, how much time you spend on the charts, back testing and forward testing to make sure the strategy works for you. Because the style of how I trade, it may not work directly for you. Someone else's style or strategy they have, it may not work for you. You have to find something that does work. Now, the strategy when I trade is very simplistic. It's nothing difficult or hard about it. You can come over to the Discord, which is a link down in the description portion of the video. Click on it. It's free to join the Discord, and you can ask some of our members there just as well. I'm telling you this because all you really need to do is master structure, okay? Understanding if the market is trending and making higher highs and higher lows, that you only need to be doing what? Take trade opportunities back at demand zones. I'm trading supply and demand, but I'm using a very specific top-down analysis approach, what I like to call multi-chart confluence. I'm first marking up a higher time frame chart, and then I scale down to a lower time frame to find myself an entry point so I can weed out all the noise or, all the drawdown, okay? I don't want to be taking drawdown in my account, not at all right? Now, again, even with this small account, you can grow it within a matter of 30 days. And I talked about this in a prior video surrounding the 5% rule, risking only or leveraging only 5% of your account per trade, right? That's going to help maintain stability. It's going to help maintain consistency. It's going to help, you stay in line with your trading plan and help you as kind of just in a sense, if you take a bad trade, it's going to help you be able to live to see tomorrow and trade again, not blowing your accounts. I see so many traders, and I'm sure that they're new, but I see a lot of them joining these challenges or prop firms. I'm not trying to bash or say anything bad about them. However, you can get to the money and make some income, I highly recommend taking percentage of it, if not all of it, your first couple of payouts, and put it into your own personal trading account, all right? Just to eliminate all the rules that the prop firms, have, okay? Because I know there's certain criteria, certain rules that you have to fall within. If not, I'm sure some funny things may take place, okay? So if you agree with me in any kind of way and, you are trading prop firms and you're fed up with that, just drop a comment down below. I'm not saying that there's not anything good that comes out of trading those prop firms, because I will say this. I believe if you're looking at trading those challenges or those evaluation accounts, it helps build some discipline, I would think, over time to see how well you can actually trade. So as a stepping stone or as a testing tool, maybe try that out if you choose to. But ultimately, in the end, you really want to have your own personal trading account and allow it to grow. If anyone out there is watching this and you agree with me, please leave a like, comment, and share and subscribe down below. I definitely appreciate it, okay? But I'm going to share with you how I go about trading using a personal strategy that works. Been working for me for the last 14 years, and there's nothing complicated about it. Like I said, what you need to do and master is structure the market. I'm saying this for a reason, guys, because I want to see people become profitable and consistently profitable day in and day out, whether you choose to do this part-time or full-time, okay? All you need to do is figure out the trend. Are we making higher highs and higher lows? Secondly, if the market's reversing, then you should know if we're bullish and the market's reversing, the pattern, so to speak, to where the market's reversing, you start to look for opportunities to go short, okay? Until the market shows its hand again. So I've talked about this plenty of times over, where the market may be shifting. Say this is a bullish direction to the upside. That's a shoulder, the last shoulder that the market made to the upside. This is the head. And then let's say this is like a shoulder right here and break structure below this area here and then here and it starts to come down. Then we go from bullish to looking, bearish. So I would be switching my bias from taking trades going long, only looking for opportunities to go short. Hopefully that makes sense, okay? Now, when it comes to the strategy itself, I start off first figuring out which way to trade based upon, again, the structure of the market. If I'm bullish, then I'm looking for key pullbacks to areas of demand only. That's what I'm trading, supply and demand. The scalping strategy, and the reason why I like to scalp is because the fact is I don't like to sit in trades for hours on end. I like to be in and out of my trades within a matter of 5 minutes or less, okay? Typically speaking, with the NASDAQ, if anyone knows out there who's watching this, that when momentum kicks into to that market, it's taking off, okay? So A lot of people they shy away from trading the Nasdaq because it's so they say it's volatile, it's kind of quick. Yeah, it is a faster moving market because it's a thinner market. But the thing about it is, it provides and gives you a lot more opportunity than some of the other thicker markets. Say for example the ES. The ES is a great market to trade. Okay, the tick value is higher, but trying to find a setup that works out, you may spend some time on the charts, and you may it may be a hit or miss. Okay, I still trade it. I have the charts up on my chart or my monitors looking at it. But lately, and for the last couple of months, the Nasdaq has been where it's at for me. The Nasdaq futures. Okay, so if I see that the market is moving to the upside, my only bias is looking for opportunities to go long until we shift and start breaking structure to the downside to actually go short. All right. So here we go. So like I said, as an example, let me show you. If the market is bullish to the upside, and this is from like May 15th, 16th, and maybe the 17th and 18th. But anyways, I'm just showing you this because this is from a higher time frame chart. This is a major high resting right here. As long as the market is making these swings where it's higher highs and higher lows, then I should be looking for opportunities, or you should be looking for opportunities to go long, okay? It's when the market reverses, that's when you want to start looking for, go short. But then when we break structure or re-break structure back to the upside, okay, and we start pushing higher, again, always keep your mind on where your major highs and major lows are, then we should be shifting it again from bearish back to bullish. Now, when the market breaks structure and is taking out structure to the left, as we are approaching this major high here, high, higher, low, and pushing higher, it pulls back to a beautiful area, say for example, right here of demand, right? But I like to take trades. I tell people, if you have a hard time understanding, when the market is breaking structure and taking out minor areas of structure, because there's a difference between minor and major areas of structure, then stick with waiting for the market to run areas of major structure. Okay, like right here, take out this major area of structure right here, pull back, key area of demand right here, right? Then you just move down to a lower base chart to look for opportunity to go long on the 24 range chart. And I'm going to show you an example of what I'm talking about as well. All right. So again, look for something major structure lows or highs to be taken out if you're to be able to look for a setup or opportunity to go either short or long. So right here, where the market is making higher highs and higher lows, this is on June the 5th right here. So we got a high, higher low. As it's coming down, it's breaking structure. So we kind of got a shift from being bullish back to bearish. But then the moment we reverse and we start to have highs, higher lows, and re-breaking structure back to the upside, now the market shifted back from being bearish back to bullish. Okay. It can change on a dime at any time, so you have to understand, and know how to read when it's shifting. When you have head and shoulder patterns coming from the upper portion where the market's making higher highs and higher lows and starts to push lower, or in inverse of where you have maybe this was a inverse shoulder, a inverse head, and then the inverse shoulder right here to the upside where it takes the shoulder here out, have a inverse shoulder, inverse head. So it's making highs, higher lows, pushing higher, breaking structure higher above here and here. So this is reversal from, where it was bearish to the downside for a very short period. So the first pullback, say for example, to a nice area of demand after the market shifts in a direction going to the upside here, you just move down to your lower base chart. So I'll mark off my higher base chart first. So starting again, if we have higher highs and higher lows, structure being broken to the upside, and then we have a reversal. So the market made a shoulder, head, okay, and then we have the market making lows, lower highs. So we have a shoulder like right here, so it's making lows, lower highs, breaking structure, coming lower below here, here, and below this area here. So once it breaks below this area, okay, then I know that the market is reversed at this point from being bullish to bearish. But again, you see that it didn't keep running to the downside. They quickly turned the market back around and they came back up to take this major high right here out back to the upside. Okay, so that's something you need to be mindful of and keep your eye on when things like that happen. And always keep your eyes on where your major highs and major lows are. So when they started re-breaking structure back to the upside, they started creating demand zones. Push up, pull back, breaking structure higher, as you can see there. Okay, but they were also taking out structure to the left hand side. So they had high, higher, low. First break to the upside where it made a high, it took out structure to the left. Then they had a pullback, and then they broke structure right here, right above these highs. So the market came back to this demand zone right here. I'll move this box away right quick. Right here, that was a valid area to take a trade from. Okay, I'm going to pull back right here if you could, go long. Not from the higher time frame, but then scale down to your lower time frame chart to find an entry point to go long where you have a zone resting on the inside. I'm going to show you this as an example. Then the market made another high, and then you have a pullback to another key area of demand right here. So if I show you this right quick, I'm gonna put this on all charts, and then we'll move down to a lower time frame. So start, find your, from the higher time frame, get the direction right first, okay? We're bullish to the upside now. Pullbacks, key areas of demand. After we make a reversal, okay, going back to the upside, look for a pullback to a key area of demand, and then scale down to your lower time frame chart to find that entry point. So if I scale down, this is going to be the area in which I'm going to engage in going long at when the market comes back. That large rectangle blue box, that's that same box from the 120 that we marked up. As I said, first markup is off the higher time frame 120 range chart, or whatever higher time frame you use. Then when the market starts retracing back to the higher time frame zone, look to see where you have a nice, beautiful area of demand at on the lower time frame. I switched down and moved down to my 24 range right here. This is a beautiful area of aggressive buying. There is a, high probability. Sorry about that. High probability demand zone resting right here that I can look to go take a trade off going long there. All right. So that is an opportunity where you find a confluence, higher base chart or higher time frame and lower time frame chart just as well. When you have that confluence, then you can look for opportunity to stay in the direction with the trend and to go long off of. All right. So I'm going to show you another example real quick as we go back. Let's go to the left. Okay. Right here. The market was bullish here. I told you it switched from bullish being bearish the moment it started reversing to the downside, and we started breaking structure coming down, and we also broke structure over here. So this is a reversal right here. Pulls back this key area of supply right here. Okay, it's not demand but supply, aggressive selling. But I'll mark it up on my higher time frame first. When I go down to the lower time frame, I can see it clearly that this is an area where I can take a trade from. Now in this case here, it didn't come all into and tap the higher time frame zone here, but this is a supply zone off the 24 range that you could have taken directly off of here. But if you notice above here, and I talked about this in I think video yesterday or the day before, there's another supply zone right here. I'm going to show you right here. As the market was breaking structure lower, it made low, lower high, broke below this low, pulling back to a key area of supply. Now, this trade setup was a beautiful setup because not only do we have confluence with the higher time frame being a supply zone, we also have a supply zone on the lower time frame. So we're looking for where there's a lower time frame or entry chart supply zone in this case here, or it could be demand depending on which way the market's moving, where it's resting on the inside of the first markup or the first chart or the higher time frame chart we marked up right here. And then when you move down to your lower time frame and you have that confluence with the lower time frame high probability zone resting on the inside of the first zone from the higher time frame you mark, you look for the rejection to actually go short. So when the market pulls back, first zone tapped in 120, second zone lower time frame high probability 24 range, I'm looking to go short either aggressively on the first bullish candle close to the downside, maybe below here at 21,785, or the conservative way is to wait for the first break and close of the candle to the downside, like right here at say 21,779, or you can get in here at 784, either one. And we're aiming for what? We're aiming for the lows back down with a pullback or on the retracement back to the downside was right here. Not retracing, I'm sorry. We're pushed down right here. We're tracing back to the zone. We're aiming for the lows right here. And then you see as it does, it continues lower. Why? Because we have multiple confluence here. We have the larger time frame zone, the small time frame zone, and there's actually even more confluence because it's approaching the 800 round number. 800, half and whole number, points like 800, 700, 600, or 850, 750, 650, whatever it may be. Those half and round numbers are areas or levels just as well, which the market likes to pause at or reject possibly at those areas. Okay, but that's all the strategy really is. I mean, I break it down like that. I talk about it across a lot of the videos here because that's what I really stress on the content on this channel here is the strategy, because that's what's important. Getting that right, being able to back test and forward test it to see if it's going to work for you. Okay. Now, if you really want the full rundown, if you really want the behind the scenes information or greater detailed information surrounding the strategy itself, where I go into great depth surrounding so much video content surrounding the actual breakdowns of my trades, These are trades that I post over on the Discord community. So if you join the Discord, you'll see lots of trades that I take, and I post them there. I'll go back to that private community. This is what it is. It's those that want to become an elite member. What you receive are so many perks and rewards that have helped a lot of people identify, the types of trades to take, when to take the trades, where to take them from, where to take profit, where to take or place a stop loss. You may want to become an elite supporter or an elite, or a ultra elite supporter. The link is down in the description portion of the video below. You'll see it titled Ultra Elite Supporter. Again, you can just become a basic elite member. That's only $6.99 a month. What is that, like 24, 25 cents on the day? And by becoming an ultra elite supporter, that's like 49 cents or 50 cents on the day. It's like $14. It's $14.99 a month. Okay. Now you can choose either one of those tiers. Each one of them do provide perks and rewards. So like with the $6.99 tier where you can become an elite member, you receive the trade breakdown videos, video playlist, and the market structure video that I did as well, going into depth. If for anyone out there that's kind of struggling with that concept, if you want to become an ultra elite member, then you receive everything I just mentioned, plus the live recorded trading sessions and my market recap videos. Now, do I do this every single day as far as like 5 days a week? No, but I do it several days a week. So there's so much relative video content already there where you can go back and kind of use it as a learning tool, education tool, to where you can grasp and understand how I personally trade. Now, this is how I personally trade. You may not see things the same way, but if you put the time in on the charts, you will see that the strategy works. We have people that are part of the community and trade it each and every day. So it's up to you if you want to, join and become either an elite or an ultra elite supporter, but the link is down in the description portion of the video, and there's tons of valuable content there that can help you out. Outside of that, that's all I have. If you haven't already subscribed to the channel, please take the time to sub by clicking that button down below. Make sure to turn your post notifications on so you don't miss any of the video content. And last but not least, make sure to drop a like on the video if you found some value in what I'm sharing with you today. All right, take care. I'll see everyone in the next video.